It's Tuesday, the 10th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The United Nations says the world is heating up faster than expected, putting billions of people at risk, and Australia is being hit harder than most. That's our main story. Also coming up to today's podcast, the Moderna vaccination gets a green light as the spread of the virus continues. Suncorp kicks off earnings season with a special dividend and buybacks, and a massive cost blowout for the Westgate Tunnel in Melbourne. Then stay listening for my chat to Governance Institute CEO Megan Motto about diversity on boards. But first, here's a brief look at markets. Wall Street was mixed overnight with the S&P 500 flat. In early afternoon trading, the Dow Jones Industrial Average down slightly and the tech-heavy Nasdaq up 0.3%. European markets were up with London's FTSE closing 0.1% higher and the Europe Stock 600 up 0.2%. The S&P ASX 200 was unchanged yesterday, ending the session at 7,538 points. The banks all did well, with ANZ leading the way, up 1.4%. Commonwealth Bank was up 1.2%, while Westpac and National Australia Bank were both nearly 1% higher. That was in large part thanks to Suncorp's half-year result, more of that in a minute. However, most of the large companies went backwards yesterday. The big three miners were lower as iron ore prices remained weaker than they've been. CSL was down and so too the big retailers. Many of the tech stocks were also lower, with Afterpay dropping 1.6% and Xero down 0.9%. The worst performer was News Corp, which fell almost 8%. That's the same amount it rose last week after unveiling its record profit. Oil prices fell overnight, down more than 2% and are off 8% over the past month. That's on the back of higher COVID cases affecting demand. Gold prices have fallen further over the past 24 hours. It's now trading at around $1,730 an ounce and is down 4.5% over the past week. That has sent gold stocks lower. Yesterday, Ramelius Resources and Gold Road Resources both fell 5%. Market leader Newcrest finished down 2.7%. And the Aussie dollar is trading at 73.4 US cents. It's off about 5% so far this year. The Reserve Bank won't mind that because it makes Australia's exports cheaper, and that's good for the economy. The United Nations Intergovernmental Panel on Climate Change's sixth report, released last night, said the world was likely to reach 1.5 degrees of warming by 2040, even if there were deep cuts in greenhouse gas emissions. And Australia will bear the brunt of it, with longer, hotter summers, more bushfires, and more coastal erosion. The report found that human activity had already warmed the planet by 1.1 degrees Celsius since the Industrial Revolution. Sea levels had risen at a rate higher than the global average in recent decades, snow cover and depth had decreased and were likely to fall further. United Nations Secretary-General Antonio Guterres said the report was a code red for humanity, and the Paris Climate Change Accord's ambition of limiting global warming to 1.5 degrees Celsius was perilously close. And I quote him, "The alarm bells are deafening, and the evidence is irrefutable. Greenhouse gas emissions from fossil fuel burning and deforestation are choking our planet and putting billions of people at immediate risk." The report said Australia's climate had risen about 1.4 degrees over the past 110 years, and that's meant hotter summers and colder winters. Rising sea levels would hit Australia relatively hard. The report was signed off by 234 scientists in 60 countries and provides the basis for climate change negotiations later this year. Even with rapid cuts in emissions, temperatures would continue to rise until at least 2050 and lead to further extreme weather events. The panel said the evidence for human-induced warming was unequivocal. Locally, the Morrison government still says it will achieve reductions in greenhouse gas emissions, but won't commit to a target. This report has been 8 years in the making. It's the seminal piece on climate change. It's about as frightening a read on the climate debate as you can get. In a moment, the rest of the news you need to know this morning. In overseas news, Associated Press is reporting that over 30 Chinese officials have been fired or received punishment for allegedly failing to respond properly to the latest surge of coronavirus in the country. It includes heads of health commissions and city districts, as well as hospital staff. Tough justice. And the land border between Canada and the United States has reopened for fully vaccinated travellers between the two countries. The border has been closed since March. It comes as the number of new COVID cases in the US last week hit 761,000, the highest 7-day total since February. Locally, Australia has given the green light to the Moderna vaccine against COVID-19 and expects to import 10 million doses by the end of the year. It will sit alongside AstraZeneca and Pfizer as the rollout of vaccinations pick up pace. Moderna has proven to be 93% effective against any infection, 98% against severe disease, and 100% against death. The vaccine requires 2 jabs 4 weeks apart and is already in use in the United Kingdom, Canada, the United States, Singapore, and the European Union. The news came as New South Wales reported another 283 locally acquired cases of COVID-19 yesterday, and at least 100 of them were in the community while infectious. The region around Byron Bay in New South Wales North and Tamworth in the northwest went into snap lockdowns last night. There were 11 new cases in Victoria, all linked to known clusters, but none of them were in isolation for their entire infectious period. At least regional Victoria ended its lockdown yesterday. Premier Daniel Andrews said he didn't know if the Melbourne lockdown would end as scheduled on Thursday. And Queensland recorded 4 new cases yesterday, and its Premier Anastasia Palaszczuk said she would go harder on border closures with New South Wales if the situation in that state deteriorated. She was talking before the announcement of the lockdown in Byron Bay, which is very close to the Queensland border. Suncorp, the first of the large financial institutions to report June half-year earnings, unveiled a 42% jump in cash profit yesterday, triggering an 8% rise in its share price. Earnings from its insurance business rose, and money set aside for bad debts was not needed and passed through to the bottom line. The Queensland-based business, which is a top 30 company, also announced a special dividend on top of its regular dividend and said it would buy back $250 million worth of shares. The highlight of its result was the group's insurance business, which includes AAMI and GIO. This was a strong result and a harbinger of things to come from the financial services sector. Big results, big dividends. Another of the big insurers, IAG, said Tom Pockett would succeed Elizabeth Bryan as chair. Its share price jumped nearly 5%, which probably had more to do with the Suncorp result rather than the change in chair. QBE's share price was also higher, up more than 3%. Transurban said the cost of building the West Gate Tunnel in Melbourne had risen by about $3.3 billion to at least $10 billion, a figure some analysts think is still on the low side. The troubled project, which was supposed to be completed in 2023, but is running at least 2 years late because of a dispute over where to dispose toxic soil, is a venture with the Victorian Government, CIMIC and John Holland. Transurban yesterday reported a $3.3 billion net profit for the 2021 financial year, thanks in large part to the sale of half its US toll road business. Without that, the company lost almost $300 million. Not long ago, Transurban was a share market darling, but the disastrous Westgate project, alongside far fewer cars on the roads due to COVID, has hurt the group. Its share price fell 2% yesterday and is up only slightly over the past year, while the ASX 200 more broadly is up 25%. Treasurer Josh Frydenberg yesterday told Parliament that he expected the economy would bounce back following the current run of lockdowns. He quoted Standard & Poor's advice that the lockdowns wouldn't hurt the country's AAA rating and the Reserve Bank's statement on monetary policy last week to say there was light at the end of the tunnel. New laws passed Parliament last night that relax obligations of listed company directors. Under the changes, a director would be liable for continuous disclosure breaches only when they acted with knowledge, recklessness or intent in market-sensitive updates. Previously, directors were in trouble if they failed to disclose information to markets regardless of intention. Rio Tinto's management has been criticised by an external review into its massive copper mine in Mongolia. Rio has claimed that weak geology was the main driver of the huge cost and schedule blowouts at the mine, but Rio's minority partners in the $6.75 billion project commissioned the report, and it blamed a dysfunctional approach to project management. National Australia Bank will buy Citi's consumer business, which includes $12.2 billion in loans, much of it in its large credit card business, and $9 billion in deposits. Australia's third largest bank will pay $1.2 billion, and around 800 Citi employees will become part of the NAB business. The bank's chief executive, Ross McEwen, said he was confident credit cards had a strong future, notwithstanding the rise of other payment providers such as buy now, pay later groups. He said there were 27 billion credit card transactions a year and $39 billion in balances. Another deal in the banking sector announced yesterday was Westpac's sale of its Australian life insurance business to Tal Daiichi Life Australia. Under the $800 million deal, Westpac will no longer manufacture life insurance products, but will sell TAL products to customers. The sale was part of Westpac's efforts to simplify its business. It's already sold its general insurance business to Allianz, its vehicle financial business, and its New Zealand life business. Away from the major banks, Latitude Group has bought personal lender Simple for $200 million. Latitude has mostly lent money for mortgages, but the purchase pushes it more aggressively into the $11 billion personal loan market. Latitude Chief Executive Ahmed Fahor said the group would roll out its existing loan book onto Simple's technology and will pick up about $53 million in loans. He said the better technology would allow Latitude to replace systems that were 20 years old. Latitude listed on the ASX in April, and yesterday's share price jumped nearly 6%. The Macquarie Group last night said it would buy a majority stake in the British group Southern Water for £1 billion, or about $1.9 billion. Aurizon said it was looking beyond rail to grow its bulk haulage business as it comes under investor pressure over its massive thermal coal hauling business. The group wants to diversify its operations to offset its reliance on coal, and it was looking at trucking and port services businesses. Aurizon also hauls copper, nickel, lithium, phosphates, grain and iron ore. The rail group announced a slightly higher profit last financial year. Its share price finished up 1.7% yesterday. Regis Healthcare has become the latest big business to fall foul of rules around wages, yesterday saying it had underpaid staff over 6 years by between $30 million and $40 million. As a result, its full-year earnings will be reduced. It triggered a more than 7% drop in the group's share price before it ended down 5.7%. Several large organisations in recent times, including National Australia Bank and Woolworths, have inadvertently underpaid workers. In Australia's biggest maker of bricks, Brickworks has had to halt 30% of its production as a result of the lockdowns in Sydney, and one of its roof tile facilities in Brisbane has also had to cut shifts because of restrictions in constructions in Sydney. There's plenty of bricks ready to go in holding sheds, but that doesn't help the workers at Brickworks. The group share price fell sharply yesterday before recovering to close down 1.5%. Up next is our daily interview, and my guest today is Megan Motto, the CEO of the Governance Institute of Australia. I've spoken on plenty of occasions about the number of women on Australian boards, and the latest report card is now in. There's been some progress on diversity, but there's still a long way to go. Megan and I look at where our boards are succeeding and what they need to be doing better. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 10th of August 2021. What a big show. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.